Bitcoin is entering a perfect storm kind of situation as it eyes up the $10,000 mark with stronger fundamentals than it has ever had before, all of which is happening at the exact same time that central banks seem intent on digging the grave of fiat currencies with their continued money printing policies. Now, before we jump into that, if you have been looking for a way to play the volatility of the Bitcoin markets, then check out Bybit. It is a margin trading platform that allows you to long and to short the Bitcoin markets with high leverage. You get $10 in Bitcoin just for signing up and $50 in free Bitcoin after depositing 0.02 Bitcoin or 6 Ethereum. Just click on the link down below to get started. I'll be doing a tutorial for Bybit here soon to really break down margin trading for anyone who doesn't understand that, but until then, please keep in mind that margin trading is a high-risk game and only for traders who know what they are doing. So, let's start off today by talking about Bitcoin's perfect storm. Bitcoin keeps slowly working its way up towards $10,000. Of course, why does Bitcoin need to break $10,000? Well, this will be the event that a lot of people are saying really starts to get the retail investor to take notice. Why? Because we are funny, hairless apes, guys, and our monkey brain likes big numbers. Crossing that 10K barrier will be massive, since it's a nice big round number and it moves us from being a 4-digit to a 5-digit dollar valued Bitcoin. Crossing into the new all-time high territory will also be a huge event, and that's probably when real massive retail FOMO is going to kick in. And it's insane that they're not buying now and that they're going to buy when it's over $20,000, but this is herd mentality stuff here, guys, and that factor is strong. And we will cross those levels. Make no mistake about it, 20,000 will happen again. Bitcoin has been crushing resistance levels like Godzilla tearing down skyscrapers. Please understand, though, that Bitcoin is largely still under the radar. Retail FOMO has not really started yet. Yes, there are new investors coming in. I see them all the time. I get those messages. But the flood has not yet started. It is mostly institutions and the savvy people who are in the know who are buying Bitcoin right now. Last time we had real retail FOMO was when we had that parabolic price explosion back in 2017. But the situation for Bitcoin right now is very different compared to 2017, which is why I see the price explosion in the coming run moving us into the $60,000 or the $100,000 zones, which of course fits with the charts and what they might be saying at the moment. So let's cover off a few of those perfect storm factors that are not the technical indicators. Now, and I want to do this before talking about that sucking vortex at the center of everything, which is fiat and the central banks. So first thing is that the hash rate has reached an all-time high of 62 quintillion hashes per second last week, which is a 60% increase over the yearly low. And even though it has taken a little dip since that time, it still shows that the mining community is alive and well and making money, and the network is more secure than ever before. In fact, it is as secure at 10,000 as it was at 20,000 last year, 2 years ago now almost. The next big factor is that the interest in crypto derivatives has never been higher, with the CME setting new records on their futures markets contracts in the month of May, and we still have at least 2 more, but likely 3 more major Bitcoin futures products which will be launching this year. And that's just on the regulated side of things. We cannot ignore the massive futures markets like BitMEX, which allows anyone to short or long Bitcoin. It is a monster in terms of volume, nor can we ignore the upcoming platforms like Bybit that are allowing more and more people to get into the game. Then, of course, we must include that Bakkt is coming and that Fidelity is getting ready to unleash Bitcoin on all of their clients, with sources that I know saying that Fidelity has been training their sales team to sell Bitcoin during this year. TD Ameritrade is offering Bitcoin. All of which really just underlines who is in the driving seat of the market right now. It isn't retail, guys. It's big businesses, institutions, hedge funds, family offices, venture capital firms, large corporates, the mining guilds. All these people are the ones driving Bitcoin today. But they are building the infrastructure that will be available to unleash the inevitable retail flood, which is due to come in the coming months and the coming years. Throw on top of that Microsoft is building on top of Bitcoin. Apple added the Bitcoin symbol to its keyboard characters on its mobile phone apps. Bitcoin is trending in Google searches. Again, seeing really high levels of trending actually, and that as the research group The Tie has shown us that the sentiment about Bitcoin is mostly positive at the moment. So people aren't Googling, when's Bitcoin going to zero? How to buy Bitcoin and Bitcoin price predictions. Looking at the whale alert over the last few days, we can see that there are massive amounts of large Bitcoin withdrawals happening from major exchanges. A little 5 million here, a little 10 million there. Whales are accumulating Bitcoin. They are buying Bitcoin by the hundreds. They are buying Bitcoin by the thousands. They're doing it in such a way that's not causing massive price spikes, but they are doing it. And the question is, what are you doing? Stack sats and chill, my friends. Also, I know that everyone is talking endlessly about Facebook's Libra coin these days, and really, I don't want to talk about it any more than I already have, but there is one story that I just had to share with you guys that makes you realize why Bitcoin is so freaking amazing. The House Financial Services Committee chair in the United States, Maxine Waters, has asked Facebook to halt development of the Libra cryptocurrency until congressional hearings can be held on it. You know who doesn't need Congress's approval? Bitcoin. Congress couldn't shut Bitcoin down even if they wanted to, but they could shut Libra down like that. And speaking of the land of the free, U.S. investors have been cut off from yet another exchange. This time it is the non-custodial trading platform, Bancor, which will be blocking U.S. IP addresses from accessing the site. The stated reason for blocking American investors? Regulatory uncertainty. Again. The only question now is which exchange will ban U.S. customers next. Just a matter of time. And interestingly, the restrictions that are being put into place will probably actually result in U.S. investors increasingly flowing their money into Bitcoin, not into altcoins, since alts will become increasingly difficult for the average U.S. investor to access. Bitcoin will be the logical purchase for many. So, let's move on to the massive black hole at the center of global economics right now, and also, of course, which has a massive effect on the crypto economy. Central banks and the broken fiat system, something that I believe will be a massive boost to Bitcoin. In the United States, the Federal Reserve has publicly stated that it will aggressively use quantitative easing to fight the next recession. And that recession is coming, guys. It's inevitable. Now that is just a fancy word for inflation, which is a slightly less fancy way of saying that they are going to print loads more money aggressively, which they will take that money and they'll give it to their banker buddies for basically nothing. Those banker buddies then get to charge you like 20% interest on, of course, if you take any loans from that is. And remember, they got that money for next to nothing. And to make it even more fun for you, for every dollar printed by the central bank, your dollar in the bank becomes worth a little less as your purchasing power goes down. If you thought that the last quantitative easing events were really big, well, you ain't seen nothing yet, guys. They will print the dollar into irrelevance. And the US is not alone in this endeavor. No, the European Central Bank has been stating recently that it is preparing to cut interest rates and to print more money this autumn. So if you're holding euros, then prepare for the money printers to steal a little bit of money from you. And in Australia, economists are urging the Reserve Bank to fire up the printing presses and make more money. And a recent meeting by the ANC in South Africa has recommended that the government explore using quantitative easing as a way to pay off government debt. It's happening everywhere, guys. While Australia and South Africa may not decide to do quantitative easing in the end, the EU and the US seem to be happy to do it. And the message is clear from central banks. Printing money solves problems in the short term. Long term, it's robbing you blind. It has been for decades. You might not have even known about it. All of this decreases the confidence and the ability of central banks to actually be able to manage the global economy because they can't. And it makes the very real possibility that stock markets and that economies will continue to be under massive threat as quantitative easing kicks in, things become devalued. And all this is happening at the same time that we have the trade wars getting more and more bitter. We see capital controls being put in place in countries like China. We see the international sanctions regime being continually heated up, but being challenged by the countries who it's targeting. Brexit's boiling in the background. That hasn't gone away either. The puppet masters trying to control the global economy are increasingly incapable of managing the internet era economy. And increasingly, the citizenry is waking up to this reality. And many are finding and choosing the money of the internet. They are choosing Bitcoin, which, far from printing more money, is actually counting down the days to supply reduction, the Bitcoin halving event. So Bitcoin is on the verge of becoming 50% more scarce on a daily emission basis. And the ECB, the Fed, reserve banks around the world, they're all looking to press that button and start printing bucket loads of money to print your wealth into oblivion. Good times. Gotta love central banks, eh? And actually, I want to bring up this. This is from Michael Lesser. He is a community member and supporter of the channel. He brought up a really good point in the comment section the other day, and I wanted to share that with you because it resonated with me, and it's kind of what I wanted to say, but I think he put it in a really good way, and that is that so much of the talk about price of Bitcoin is not actually about how much fiat we can get back for our Bitcoin in the future, but about the purchasing power that that increasingly scarce asset will have in the future. So a $60,000 Bitcoin doesn't need to be exchanged for a big pile of dirty fiat. The purchasing power of that coin can be changed for something real, like a piece of land or an apartment, or maybe to help build a school in a less privileged country. Whatever you want to do with that money in the future, it's the purchasing power of that, not necessarily the need to change back into fiat. And the key takeaway is that one Bitcoin will always be one Bitcoin, guys. More Bitcoin will simply not be printed. The supply is limited. Also, part of the story about Bitcoin being worth $60,000 or $100,000 is, of course, that these fiat currencies are continually being devalued. Every time the central banks print more money, they steal purchasing power from you. Year on year, Bitcoin is painting higher lows, giving you a stronger purchasing power in the long term. Fiat is one of the biggest lies of modern society. It's one of those stories that we tell ourselves in order to feel comfortable at night. That someone who knows what they are doing is in charge of the economy and is in charge of the money flow. But the reality is that either those people don't know what they're doing, or perhaps more scarily, they do know what they're doing and do it anyway because they have evil intent. Either option sucks, either way you look at it. Governments are literally just printing money backed by nothing. There's no extra value attached to it when they print more dollars or print more euros. Just the belief between you and me that the assigned number value on those notes still remain relevant to both of us at the time of exchange. Bitcoin should be considered as a strategic position within any long-term investment portfolio, considering its transparent, immutable, and scarce, and censorship-resistant characteristics, as well, of course, as the massive global liquidity that it has. Bitcoin is a market disruptor. It has unique properties that mean that it is likely to thrive and to boom beyond belief in times of economic crisis. And on to the final story for today. I wanted to give you guys an update on Vid. This is an innovative new social media platform that we talked about around a month ago here on the channel. Now they are doing a 5-year token sale. They're selling 1 million tokens a day, which is either genius or madness. I haven't fully decided yet, but it's certainly interesting to see that they are doing this kind of a sale. And now during the first few days of the sale, we have seen some super cheap token prices. So the sale kind of works like this. There are 1 million tokens a day which are up for sale, and those tokens are evenly split between everyone who goes and puts their Ethereum on the table. So if you put 1 ETH in, and I put 1 ETH in, then you and I split the pot 50-50. Obviously that situation is not likely to happen with only 2 people putting their money in, but you get the idea. Right now, the tokens are going for crazy cheap valuations as it is still a well under the radar project, but the price paid for tokens has been increasing every day. So it could be a good chance to get in on the ground floor if you believe in the project. Obviously, DYOR as always, guys. There is a link down below if you want to check that sale out. Anyway, guys, thank you so much for watching today's video. As always, you guys are super, super awesome. So thank you so much for taking the time out of your day to come over here and check this video out. Make sure to hit that thumbs up button. Come and join us in the Telegram chat. There's a link down below in the description for that as well. We're always chatting crypto over there and having a good time. If you're new, subscribe to the channel, click that bell. Long live the blockchain. And peace out till next time.